Merck making waves today with a $9.2 billion deal to acquire flu drug maker Sedara Therapeutics. Sedara shares more than doubling on the news. While Merck closed flat, the pharma giant is racing to replenish its pipeline ahead of Keytruda's 2028 patent expiry. The cancer drug accounted for nearly half of Merck's revenues in 2024. For more, let's bring in Mizuho healthcare strategist Jared Holz. Jared, great to have you with us. Even prior to the deal, Sedara, that drug, it looked like it was going to be a blockbuster eventually. It's in phase 3 right now. Phase 2 had very good results. Still, do you think Merck overpaid? I mean, does this sort of, underscore the very, I don't want to say desperate, but the dire situation that a lot of these big pharmas are under in terms of patent expirations?
Yeah, thanks so much for having me, first off. I'm not really sure they overpaid. I mean, the press release suggests or the report suggests multiple bidders, so Merck was not alone here. The 2030, 2031 estimates is what I've been using to kind of, look at valuation in terms of, what the deals are going with respect to revenue and value that the companies are getting bid at. And this was kind of like in the 4 to 5 times range, which seems pretty practical and really in line with a lot of the recent deals. So I'm not really sure they overpaid, but to your point, I do think there's a lot of urgency out there.
Yeah. How much better, if at all, does Merck look compared to peers with this deal, with the Verona deal, with the Acceleron deal, now sort of plugging in some of the holes in the future pipeline?
Yeah, well, I think they've done a pretty good job. I mean, they're clearly, using this string of pearls strategy to, supplement Keytruda, which we all know is going to be a big issue for them in the latter part of the decade. And if you take Acceleron and you put on top of that Verona, and then you add Sedara today, and they've done other deals as well, I think they're setting themselves up pretty well. Now, some could argue, maybe they should have done one larger transaction. I know you've talked a lot about Insmed in the past or argenx. Those are possible. I just don't know that they're sellers, so they're doing it this way.
So, Jared, then does that mean that we're going to see every other company who we talk about almost every night on the show when we bring up healthcare, who's got a patent cliff, is scrambling just as hard? And we also talk about the excitement and maybe even in the biotech space more than any other part of this sector because of the M&A activity. Just kind of curious how that changes your approach, what institutions are thinking, trying to get ahead of what might be the next one.
Yeah, definitely, Tim. I mean, there's so many pharma companies in a similar position with, Bristol, Sanofi, Amgen. I think they're all going to be more acquisitive in 2026. Part of me thinks that there have already been a lot of deals that have been done. This year is going to be one of the busiest on record in terms of volume, not necessarily dollars spent, but definitely the number of deals. But yeah, and biotech's been on fire. I think this is one big reason. There's been deal after deal in this space really since the summer. And we've gotten several transactions, Metsera, obviously, with multiple bidders, Novo and Pfizer. Avadel got, bid up again today by Lundbeck. We thought that was going to go to Alkermes last week. And then today with this Merck deal, sounds like there was another bidder here too. So it's really across the board. I think to your question, who needs assets? I think they all do. I look at Bristol, Amgen, Sanofi is more, but I think all of them are kind of subject to more deal making.
Given this fevered pace of deal making, Jared, and the acknowledgement that something needs to be done urgently by many of these big cap pharma companies, has healthcare become completely investable? I mean, I respect the fact that you've come on the show and said that it is not investable at certain points in time and that there's no enthusiasm around the sector, but things really seem to have changed.
Yeah, I mean, the only sector I've liked to your point has been biotech since the summer. The rest of it, I feel like, is still encumbered with a lot of risks. And obviously, we're still looking at a sector that's underperformed the market, albeit not nearly as much today as it was a few weeks ago. I think if you're playing this strategy, if you believe that there's going to be more deal making, small and mid-cap biotech, clearly the place to be. I do think there are risk factors across the sector. And it's so difficult, right? Because this industry or this sector is really multiple industry groups into one. You got managed care, you got medical devices, pharmaceuticals. It's very tough to make a call on it in totality. But, obviously, if the M&A fervor continues at this pace, you certainly want to be long biotech into next year.